Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, March 31st, 2021. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Right now we have an inside day so far developing. Very narrow range session here for the last trading day so far, heading into the RTH open. ES only has 16.25 points of range right now. That's just 30% of average range. It's been averaging about 55 points per day on a 10-day basis. So right now, very compressed inside the previous session's range, which was inside the one before it. So right now it's a double inside. But it was a strong initial move off the Thursday low and a continuation Friday. So far this week has been mostly sideways, still trending up, and everything is still flowing to the upside. Even if price were to drop below 2-day lows here, there could be a rejection and a failed new low that ultimately leads to more strength ahead. Overall, this market has been holding near these highs, but hasn't really been able to break out just yet. You see an ascending quality to this range that's developed here, and that typically breaks to the upside. We may need to see some sort of shakeout or some sort of early pullback next month into the pivot range before we bounce. But right now, everything's still suggesting more upside ahead. If we take a look here at the NQ, you'll notice that the NQ has been within a very narrow range over the last 3 weeks now. Really, it's been compressing inward this way. It has continued to chop around the 12,900 to 13K level, and that's basically right where we left off last year. So if you look at this previous December high and close right there, those two levels, this is where we've chopped around in the NQ ever since, and we've just gone flat there. Heading into next month, we have new quarterly bands, new pivots for the month as well, and we'll have new key levels to watch. But right now, compression phase here, further sideways price action likely to be seen here. If this market can finally get through 13K, there is a couple of 100 points of upside that could be seen, but ultimately what we're looking for is a major breakout that leads to a continuation higher. Right now we're looking at further range bound price action until proven otherwise. Alright, let's take a look now at crude oil. Now with crude oil, this one has developed a rounded bottom type of pattern here in the weekly time frame. This is more of a rejection signal here that has developed. We've pulled back a little bit here so far to begin the early portion of the week here. Not able to get through the 62s, which we've talked about. The key level here is going to be 60. If there's a failure at 60 and a bounce back up, perhaps we can get this thing going higher. But for the most part, this market's been down a day, up a day, down a day, up a day, back and forth, looking for signs that this thing can reject the previous session's low and perhaps bounce back up. Otherwise, failing to hold 60 could open up a move back toward the bottom end of the range. So right now, the big level really here that needs to be taken out for the bulls is 62. If a break can happen through that level, it opens up more upside towards 68 up ahead. Alright, lastly, taking a look here at gold futures. You'll see we've gotten a 2-day continuation downward through the bottom of that range. Right now holding at the lows. Another narrow day here, 50% of average range. Just 12.2 points of range here so far. This one did break down pretty solidly through that 1715 zone. That opens up at least new lows ahead. But you can see right here, this recent low came just shy of the low for the month. We could still hit it later on today, but as of right now we have not taken out that low. And the idea here is that from this amount of energy that is being forced to the downside here, you're likely going to see that low taken out at some point. Even an early bounce next month into the pivot range above could provide another round of weakness here until proven otherwise. This market has been dominated by the bearish Pima trigger zone, downtrending upper trend line. It really needs a lot in order to break higher next month. It needs to break above the previous month's midpoint, and needs to break back above the 1760 downside break level and LVN. And once it does that, then it has some free reign to the upside. Until then, still more downside ahead, with a likely target zone somewhere between 1620 and 1650. So somewhere in this zone still to go. Even if we bounce here, it could be a selling opportunity for more weakness ahead until proven otherwise. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trader room. Take care.